All right, understanding level 1 quotes. You want to write this down as well. Level 1 quotes are also known as the inside market. So the inside market that you're looking at right now here is there are 3,000 shares total to buy, advertised to buy at $20.55. 5,000 shares total advertised to sell on the ask, which is also known as the offer, at $20.56. This is known as the inside market, also known as level 1 quotes. It's the collection or the aggregation of all of the bids and offers at that individual price at that moment. Okay? Level 1 quote give you a snapshot of the advertised supply and demand at that price. Advertise is used very intentionally, and that's what we're going to talk more about, getting filled efficiently and how to route the orders. The bid side, which you see on the left there, shows the total amount of shares and the highest limit price traders are willing to buy the stock. So if you want to advertise as a limit order, and let's say you want to advertise at the best available bid right now, that's $20.55. So again, it's advertising. You're advertising your desire to buy on the bid. The ask side, otherwise known as the offer side, it's the same thing. I don't know why there's a difference, but it's old school is bid ask. Some people call it bid offer. Just make sure that you understand it's the same thing. The ask and the offer is the same thing. All right, the ask shows the total amount of shares and the lowest limit price that you are willing to sell the stock for. So if you have stock to sell and you want to advertise it to sell, you're going to put it out there and be like, let's see if somebody will buy it off me. And you put it out there, in this case here, at $20.56. All right, so the bid-ask quotes are advertisements to buy or sell, no different than price tags on a pair of shoes. You are advertising to everybody in the world, I want to buy it at this price. I'm willing to buy it at this price. I'm willing to advertise to sell at that price. So in this case here, the bid ask or the bid offer is $20.55 by $20.56. That's the quote that you would give if somebody in the room asks you, what's the quote in, what's the inside market in XYZ stock? You'll say $20.55 by 56. It could sound really good when you know that. All right, level 2 is different. You can see it's got a lot more information here, and we're going to focus on the bottom 2/3 of what we're looking at here. It shows the same basic information as level 1, but with a lot more detail, and a lot is no joke here, okay? So what you see here is how many shares are available to buy or sell at each price level, including level 1 and outside level 1. Also showing on which routing destination those shares are advertised to buy or sell. So let's take a look at the bid price on the left. We have $195.80. So we're looking at this green window here and this column here. $195.80 in the SPY. That's the stock, the S&P 500, right? The ETF. And we can see that there's BATS, NSDQ, which is the NASDAQ ECN, BATS is an ECN, which is actually a market now, EDGE A, EDGA, EDGX, and ARCA. Those are all ECN quotes. You can advertise with them on those destinations, or you can take the shares that they are advertising to buy if you have to sell. Now, if you want to sell yourself and advertise, you'd be doing it on the offer or on the ask. So you can see that difference is $195.81 compared to $195.80. So these are all advertisements to sell. These are all advertisements to buy. And you can see there's shares at 80 cents, $195.80, $195.79, 78, 77, 76. So the best advertised bid here is $195.80. The best advertised offer, $195.81, but then level 2 shows different levels of prices and the shares, the price, the routing destination, and how many shares are available on that routing destination. And as we're going to see, that's important. All right, the depth of where and how many, where being where it's advertised, and how many shares will help us decide where to route our direct access orders. And we'll discuss exactly what that means in a second. Where refers to the specialist, the market maker, or the ECN. Okay, ECN, we're getting a little ahead of ourselves, but ECN stands for Electronic Communication Network. Again, just a little bit of history there. SOS stands for Small Order Execution System, and that came into existence during the market crash way back when. If you want to look that up, that's a really fascinating story as well. All right, so the buy limit and sell limit, important orders to learn for getting those tough fills. We use them in place of market orders. So now we're not talking about advertising. I want to make that very clear. The buy limit and sell limit orders we're talking about right now is an active order, but it's not a market order. Remember, market order, you're not putting a price in there. It's any price. Just I want to buy, just get me in, get me out, right? We're talking about a buy limit or a sell limit order that's active. You're not advertising in this case here. The intention is to take advantage of liquidity and get price improvement. All right, it helps you get a fill in a fast market conditions, but because you're not placing a market order, you can't get a fill worse than the limit order, which is the case in a market order because you're not putting in a price. You might miss the most recent inside tape, inside market. So an active buy limit is placed above the current best offer, and you will get price improvement to the best available shares that are being advertised to sell. And I'll show you an illustration of that in a minute. An active sell limit is placed below the current best advertised bid, and you will get price improvement to the best available shares that are advertised to buy. That's a mouthful, but extremely important to understand. And here's what it looks like. All right, let's look at the first one, number one. In order to sell here at $19.46. Now, first I want to say is you could advertise here, right? You could advertise at $19.51 and hope somebody hits you. Somebody has urgency to pay up, right? But what if the stock is now going down? You could advertise here and it could just start collapsing on you and you're never going to get filled because you're going to be all the way up here while the stock is trading lower. You could choose to fill and order a limit order, a sell limit order, a sell limit placed below the current best bid at $19.46. Now you can see here the point that I want to make is there are shares advertised to buy in between. That's the point I'm making, right? So 50 by 51 is the inside market. You're going to advertise to sell at $19.46. So you're showing urgency. I'm going to advertise to actually in this case you're not going to advertise. You're going to place a limit order below the best bid. And as long as there's shares in between, you will get filled up to the best price available. So even though you're actively placing a sell limit down here, if there's shares in between, which here you can see, you will get filled at the best price. The same thing on the opposite side. If you buy here at $19.55, you're willing to place a limit order above the best price. But if there's shares in between, you will get price improved up here. When I said to you a few videos back, I haven't placed market orders, this is why. This is what I do. Now, clearly, Apple, a stock that trades a lot more active, a little bit thinner, meaning there's not as many shares quoted at every price, you have to get to know your stock to know what kind of orders you need to place. But for the most part, you'll be able to do this. Okay?